Brookfield Corporation stock is up slightly after the business reported its earnings yesterday. Brookfield is also the largest position in my portfolio, so in today's video, I want to go through Brookfield's earnings and see if the stock is still looking cheap. I will also be updating you on what I plan to do with my shares and if I am buying more. Lastly, we will also take a very quick look at BAM's earnings, and I will update you with my thoughts on that stock today. Before we get into the video though, I just want to let you all know that my book, The Fundamentals of Investing, is officially available on Amazon. Thanks to so many of you ordering the book already, it has become the #1 bestseller in the stock market category on Amazon as well. So if you're interested in learning more about fundamental investing and learning how to find stocks that can compound wealth over the long term, then consider checking out my new book. I will put a link at the top of the description as well. And with that being said, let's now dive into Brookfield's earnings. And like always, I put together a Daniel Pronk slideshow for you all, so let's dive right into it. This says that Brookfield raised its dividend by 14% year over year. Brookfield Corporation does pay a small dividend, and they are growing it at double-digit growth rates. Then they also say, we repurchased over $600 million worth of shares in 2023 and expect to acquire at least a further $1 billion this year, adding value to all remaining shares. So Brookfield is continuing to buy back stock, and it looks like they are upping their stock buybacks this year. We are well positioned to continue to deliver strong financial results going forward and to achieve our target 15% plus per share returns for our shareholders over the long term. So Brookfield is still giving that long-term guidance of 15% plus returns to shareholders over the long term. That is not changing. Then they say distributable earnings, which is Brookfield's main metric. It's kind of like their earnings or free cash flow metric. They say that this grew by 17% and 12% on a per share basis. Then we can see that distributable earnings before realizations on the quarter were 1.2 billion versus 1.1 billion last year. We can also see that for the full year, they generated distributable earnings of 4.2 billion versus 4.3 billion last year. Now, initially, when you look at this number, you will see that distributable earnings were down year over year. But then Brookfield is saying that they were up 13% year over year. So what is going on here? Well, the reason that BN's distributable earnings are down year over year is because BN did a spinoff of BAM, Brookfield Asset Management, where Brookfield Corporation, BN, spun off 25% of BAM. It's kind of confusing, I know, but basically BN now owns 75% of BAM in 2023, whereas in 2022, they owned 100% of BAM. So after the spinoff, they do not own 100% of BAM's earnings anymore. And that is why the net distributable earnings for BN are down year over year, but on a per share basis, they actually did grow. Kind of confusing, but overall, to simplify everything, Brookfield Corporation did grow 12% year over year. It's fine. Everything is fine. The business is still growing. Then Brookfield starts to break down the results of all of their different business segments. So right here it says asset management, and fee-related earnings increased by 6% per year for the asset management business. And we are going to talk about this a little bit later on in the video because BAM's earnings year over year did not actually grow that much. However, the company is projecting over 20% growth to earnings in 2024. So it looks like in 2023, BAM was setting itself up for a large amount of growth in 2024. So this year, the company should see a strong growth to its earnings. But moving on to Brookfield's insurance solutions, this says distributable operating earnings were $253 million in the quarter and $740 million for the year. As at the end of 2023, annualized earnings in this business were $940 million. With the closing of AEL expected shortly, our insurance solutions business will grow to over $100 billion of assets and $1.3 billion of annualized earnings. So basically next year, Brookfield is saying that they do expect their insurance business to do at least $1.3 billion of earnings, which is over 30% growth year over year. Brookfield's insurance business is one of their brand new businesses that they're looking to build, and it's where a lot of Brookfield's capital is going to right now. They're investing a significant amount of money into growing this business, but it's working. This business is growing incredibly well. Now, what's also worth noting is that Brookfield was projecting their insurance business to do about $800 million of annualized earnings by the end of 2023. Now the business did $250 million of earnings in Q4, and it is doing $940 million of annualized earnings now. So this business is actually outperforming Brookfield's own projections by quite a significant margin as well, by above 30%. And this is typically what Brookfield does. They underpromise and overdeliver. And that is what they're doing with their insurance business. And I actually think that their insurance business can continue to outperform their own projections. Like next year, I would not be surprised if the insurance business does more than $1.3 billion of earnings. Now, moving on to the operating business. This says operating funds from operations within our renewable power and transition and infrastructure businesses increased by 7% over the year. In our real estate business, our core portfolio produced same-store net operating income growth of 7% compared to the prior year. This is interesting to me because a lot of people, like whenever I bring up Brookfield, one of the main concerns that I get is, well, don't they have a massive office portfolio? And the answer is yes. Brookfield does have an office portfolio worth about $15 billion right now. However, Brookfield's office portfolio is very high quality assets, and these assets are still growing their net operating income despite higher interest rates. So even though as a whole office real estate has been weak recently, these top tier quality office buildings that Brookfield owns are still seeing high demand, and their operating income is still growing. But moving on, then Brookfield talks about monetizations of mature assets. So this is Brookfield selling off some of its assets and doing their capital recycling program. During the year, we monetized over $30 billion worth of assets, substantially all transacting values at higher than our IFRS carrying values, validating the carrying values of our investments. This is important to note because there was a lot of questionability or a lot of concerns that Brookfield's IFRS carrying values of their assets may have been inflated. However, when Brookfield sells its assets, it's usually at above their net reported asset value on the balance sheet. So those values that Brookfield has on the balance sheet are arguably not inflated, but deflated, and not actually what the asset values could sell for today. Total accumulated unrealized carried interest now stands at $10.2 billion, representing an increase of 11%. So what unrealized carried interest is basically just unrealized profits for Brookfield on their investments. This is real profits that Brookfield is sitting on, it just hasn't sold them yet. So they have $10.2 billion of profits that they can sell and will sell in the future, and then that will be earnings for shareholders. Now, moving on to the performance highlights right here, this shows the distributable earnings for the whole business and on a per share basis over time. Now, what I like to do here is just focus on the distributable earnings before realizations, because Brookfield's realizations are them selling assets. However, these realized profits on their investments tend to be very volatile depending on how many assets they sell within the year. So I try to focus on how much cash flow is the actual business generating. And these red boxes, these red outlines right here, show the overall growth to the business's core profitability. And we can see that in 2023, the business's core profitability did grow. And this is the same story on a per share basis. The business's core per share profitability did in fact grow, which is what I like to see. Now, this next screenshot is of all of Brookfield's different assets and their net asset value per share. So what I focus on is the blended column right here. And we can see that BN's ownership of BAM is now worth about $49.2 billion. And it increased by about $14 billion year over year because BAM's shares have been performing incredibly well. Target carried interest is now worth about $26 billion. Accumulated unrealized carried interest net of expenses is also worth about $6 billion. And then Brookfield's direct investments are worth about $12.3 billion. So just in Brookfield's asset management segment of the business, they have about $93.7 billion worth of assets. And these assets generate about $2.5 billion of annualized cash flow. Then we have the insurance business, which is valued at around $14 billion today and does about $940 million of annualized cash flow. Then we have Brookfield's operating businesses, which are BEP, BIP, BBU, and Brookfield Property Group. All of these operating businesses are valued at around $42 billion today and produce annual cash flow of about $1.56 billion. In total, these investments are now worth about $150 billion and produce about $5 billion on an annual cash flow basis. Then BN has about $16.5 billion worth of debt that the corporation actually owns. So its net asset value is about $133 billion today. And on a per share basis, that is about $82 per share. So BN's per share net asset value is actually $82 per share, which is significantly above where the stock is currently trading. To put this all into perspective, Brookfield Corporation owns $50 billion worth of BAM shares and about $17.5 billion worth of listed securities. These two asset groups put together are worth about $67.5 billion. And these assets right here are all publicly traded on the stock market. So Brookfield Corporation owns about $67.5 billion worth of publicly listed stocks today. What's interesting is Brookfield Corporation is selling for about $65 billion. That is the market cap of the entire business today. So its listed stocks, its listed securities are worth more than BN is selling for today, its entire market cap. Then we also have all of Brookfield's property, which is worth roughly $22 billion today, and the insurance business, which is worth about $14 billion today, and then also the direct investments and all of the unrealized carried interest that Brookfield owns, which is in the tens of billions of dollars. And my conclusion when I look at all of these numbers, every way that I look at them, tells me that Brookfield Corporation is still undervalued today. The business is simply not selling for its net asset value, and I think that the market is still bearish towards Brookfield for multiple different reasons, and probably mostly because they own a large office real estate portfolio. But when you take a look at all of Brookfield's different assets, the stock does look cheap to me. And I do agree that the stock is probably worth somewhere around $80 per share US right now. All right, now we are going to move on to Brookfield's letter to shareholders for 2023. And this says, in total, we invested over $55 billion at excellent values in 2023, and we expect to reap the rewards of these contrarian investments for years to come. So I don't know if everyone remembers this, but at the beginning of 2023, people were quite bearish on the overall economy, and the stock market was actually in a correction. It was in a pretty significant correction. Then for the full year of 2023, stocks continued ripping, and people became more optimistic as the year went on. However, Brookfield was buying $55 billion worth of assets when people were overall pretty bearish on the overall economy, the world economy, and the stock market. And this is why I like Brookfield, because they are contrarian investors. So when people are typically worried or pessimistic about the economy and asset values are cheap due to that, Brookfield comes in and they are happy to deploy record amounts of capital. And they were actually one of the most active, I actually believe that they were the most active asset manager in 2023 and deployed the most capital. Again, $55 billion worth. Now Brookfield says that these assets that they acquired in 2023 should help boost the company's FFO and results in 2024. And I agree. With short-term interest rates expected to follow long rates lower, it looks like 2024 will be a very good year for overall business. We also expect to be more active on the monetization fronts as capital markets regain strength. So Brookfield is saying that 2024 should be a good year for their business, and I agree. And they are expecting to be more active on the monetization front, which means that they are probably going to sell more assets in 2024 as markets are hitting all-time highs again, and people seem to be a little bit more risk on, maybe a little bit more bubbly, maybe a little bit more expensive as well. So they are probably going to sell more assets while everyone is more optimistic, more excited, and pricing assets may be a little bit too high. Again, this is Brookfield being contrarian and value investors. Continuing on through the letter to shareholders, this says, value, on the other hand, is the net present value of future cash flows based on assumptions for growth. The price of a publicly traded security is rarely the same as the value. Sometimes it is lower and sometimes it is higher. So this is Brookfield's management basically saying that they understand that the price of an asset and its value are often not connected and not the same. And in the public markets, there are many times where the value of an asset is well above or below what the price is currently offering. This is the same investment mindset as Benjamin Graham, by the way. And I am pretty sure that Bruce Flatt follows Benjamin Graham and Warren Buffett. And this kind of talking is exactly replicative of how those two investors talk as well. As investors in Brookfield, we encourage you to focus first and foremost on the value of the business and the compounding of the returns of the business rather than our share price. So this is Bruce Flatt telling investors you should focus on the value of Brookfield's business and not on what the stock price is currently doing. Look to the business to value the asset and don't look to the price. However, it is worth remembering that the daily movement in the quoted price of our business is irrelevant to our operations, and a discount to value ironically presents an excellent opportunity to add further value without much work to an asset and cash-rich company like ours. By repurchasing shares at discounts to their true value versus the price, we add further value to the company. So Bruce is saying here that a discount to value ironically makes it easier to create value because you can just buy back shares at a cheap price, and I completely agree. Continuing on, this says, the backbone of the global economy is always evolving. Our organization is built around building and operating the backbone of the global economy. Of the more than $900 billion of assets that we manage, nearly half are in sectors that did not exist 20 years ago. In infrastructure, we historically invested in roads, bridges, pipelines, and electrical transmission. Today, our largest investments are in fiber connections for homes and businesses, telecom towers that carry 5G capacity, data centers for storage of cloud data capacity and AI learning, and manufacturing plants for semiconductors that power devices we use. None of these sectors existed 20 years ago. So here Brookfield is saying that their business is always evolving, but the core of the business is investing in the backbone of the global economy and the assets that make the global economy grow and work. So now the assets that Brookfield is investing in are things like data centers, renewable energy, and the assets that are overall powering the future of technology. So now let's head over to BN on Stock Unlock. And here we can see that the business is currently worth about $66.5 billion. So if we go 66.5 divided by $5 billion in annual cash flow that the business is producing now, it means that it's trading for about 13.3 times cash flow. Now, personally, I also believe that this is an undervaluation of Brookfield Corporation because this is a business that is growing its cash flow by 12% annually and is projecting to grow its cash flow by over 20% annually out to 2028. So when I'm looking at Brookfield, what I see is a 13 price to free cash flow essentially, and about 15 to 20% annual growth to cash flows over the next 5 years. This is not usually a relationship between price and projected growth that I see in the markets. And this relationship right here of a 13 price to free cash flow plus 15 to 20% annual growth is why Brookfield is the largest position in my portfolio right now. And then additionally, when I take a look at all of Brookfield's assets that it owns that we went through earlier on in that table, it tells me that the net asset value of this business is roughly double what the stock is trading for today. Or in other words, Brookfield is probably trading around half of net asset value. Again, while also growing its cash flows by 15 to 20% annually. And I actually do believe that Brookfield's cash flow growth and its earnings are going to accelerate this year and over the next 5 years as well. So every way that I look at Brookfield, I do still believe that this stock is undervalued. And that again is why it is the largest position in my portfolio and why I am most likely going to continue dollar cost averaging this business, despite the S&P 500 being at all-time highs, despite us arguably being in an AI bubble, and despite Brookfield already being the largest position in my portfolio. When I see value in the markets, I tend to buy it, and I don't really try to speculate on what the overall market is going to do, or if the stock that I am buying is going to fall with the overall market if I think the overall market is over expensive. What I try to do is if I see value in a stock and I think that the stock is cheap relative to what the business behind it can produce, then I'm happy to continue buying it, even if that stock is selling for all-time highs as well. So that is kind of my thoughts on Brookfield Corporation right now. So now let's discuss the ticker symbol BAM, Brookfield Asset Management, very quickly, because this business also reported earnings recently, a couple of days ago. So this screenshot right here is of Brookfield Asset Management's earnings. And we can see that in Q4 of 2023, it generated about $581 million of earnings. We can see that the year prior, for the fourth quarter, it generated $576 million of earnings. So year over year, this is why I'm saying Brookfield Asset Management's earnings didn't really grow. Now, at face value, this may seem like a bad thing. And actually, when Brookfield Asset Management first reported its earnings, the stock did fall. But then when the management did their conference call, the stock started to recover, and now it is actually arguably looking like fair value, if not maybe a little bit below fair value right now. And this right here is the reason why. So I went through Brookfield Asset Management's transcript, and I read the transcript to try and figure out everything going on with the business right now. And take a look at this. This analyst asked a question to the management, and this says, just 2 quick questions on my end. Your comment on expected outsized growth in fee-related earnings or earnings in 2024, is that relative to 2023 or actual growth to your target kind of earnings growth between 15 to 20% over time that you outlined in your investor day? I just want to clarify kind of what you thought about when you said outsized. So this question was very poorly worded, but basically what this analyst is asking is, do you expect to do 15 to 20% earnings growth in 2024, which you said at your investor day? Is that kind of in line with what the business is seeing? Then here is the management response. Yes, apologies if I've confused in terms of definitions, but we set out that 15 to 20% compounded annual growth rate that we expect to deliver from our earnings perspective over the planned period. And to clarify what I meant is that 2024 should exceed that target, just even given all the capital inflows that came in 2023. So this is the management saying that they are expecting Brookfield Asset Management's earnings to grow by over 20% in 2024. Now, on an annualized basis, the BAM ticker here, the 25% of the whole Brookfield Asset Management business, is doing about $581 million of annualized earnings now. So if the business grows its earnings by 20% in 2024, then it should be doing roughly $700 million worth of earnings for 2024. Now, this business is currently valued at $15.5 billion today. So if we divide this by $700 million in earnings for 2024, then it's trading at a forward price to earnings ratio of about 22. Now, a 22 price to earnings ratio for Brookfield Asset Management, I actually don't think is that expensive, because this business is projected to grow by 15 to 20% annually out to 2028. So this is a business trading for about 22 times earnings and growing at 15 to 20% per year. Brookfield Asset Management also increased its dividend by 19%, and the dividend yield before this increase was about 3.2%. So if we multiply this now by 1.19, then it says that the dividend yield today is actually about 3.8% on the company's new dividend. So this is also a dividend yield of near 4%. It's around 3.8% today. And they are projecting to grow this by 15 to 20% annually as well. Now, in the market, it is pretty rare to find a stock that has around a 4% dividend yield and is also growing that dividend by 15 to 20% annually. So I do think that Brookfield Asset Management, the BAM ticker, is arguably looking like it is selling near fair value or slightly below fair value. And those are the reasons why. However, I do still think that BN is offering more value than BAM today. So those are my thoughts on BAM's earnings. Those are my thoughts on BN's earnings. Overall, I do still think that BN is undervalued, and it is still a stock that I am going to consistently dollar cost average in my personal portfolios, so long as I think that it is still offering value. So that is my plan with my BN position as well. BAM, I'm not really as excited to add to right now. If that dividend yield does get above 4% again, then I would be much more eager to start adding. It's almost there, but it's not quite there yet. But again, if it does get over 4%, then I would be more eager to start adding to this stock as well. But that is going to wrap up the video for today, everyone. And if you did enjoy this video, then please remember to leave a like on it. And if you're new here, then please consider subscribing to my channel as well. Also, if you want to learn more about fundamental investing and how to identify great long-term compounding stocks, then seriously go and consider picking up my book, The Fundamentals of Investing, on Amazon. It is a great book. I'm getting great feedback from the readers so far, and I do truly believe that it is a great read. But I'm going to stop rambling now, so thank you all again so much for watching. I truly do appreciate it, and I really hope to see you all again in my next video.